The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. But as always, we want to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And, well, we've had the Fed minutes come out. We're about where we were when they started. I think a lot of people were looking for some language in there about what they were going to do about the roll-offs, and there just isn't much in there to sink your teeth into. They're not saying they're doing more, they're doing less. Anyway, up 7, what's called, a little bit more juice here, up 8 points, now 9 points on the S&P cash. So we got just a little bit of a push off of that. But again, I don't think that there's much in here that really changes much of anything. If anything, I think we saw a little bit of a disappointment because there wasn't any language in there about what they were going to do about roll-offs. But again, we're in the going back up against previous highs. Volume has been mediocre at best. We're doing about 4 billion shares as we start the show today. And of course, we've been kind of doing about 7 billion shares a day in the consolidated CBOE. Looks like we're probably in that same range now. And I think we're probably going to take an hour for people to probably disassemble the Fed announcement. But I don't see anything really that bullish or bearish in it. So we go back to some sporadic earnings calls that probably not going to move the market that much. And just a lot of stocks up on very high, or up at highs on very light volume. We'll look at a bunch more of those today. Dow's up 73, NASDAQ's, is that right? Let me go ahead and read. Yeah, I didn't think that was right. NASDAQ's up 12, Russell's up 6. So what else do we have going on? That's about it. When we look at some of the other things that tends to push the markets around, we're off a little bit on the dollar, not that bad, 96.26 on the March 19th contract, and that's about it. So anyway, we'll take a look at it. Anyway, let's do a little bit of history, and then we'll get to charts as soon as we can today, and we'll follow any action that we get, any pin action that we get off the earnings, or I mean off the FOMC meeting after it's digested a little bit.
And it's all just a little bit of history repeating.
It is history repeating, and on this day in 1939, 6.5 months before Adolf Hitler invaded Poland, New York City's Madison Square Garden hosted a rally to celebrate the rise of Nazism in Germany. Inside, more than 20,000 attendees raised Nazi salutes toward a 30-foot-tall portrait of George Washington, flanked by swastikas. Outside, police attacked the protesters in New York. 100,000 who had gathered to protest the rally. And kind of, you look back at it today and you go, 1939, everybody kind of had an idea about what's going on. National Socialism was really what a lot of these folks were pushing. And I see the ghosts of those folks today almost saying the exact same thing. A little scary. But you can't make people think. I guess that's the problem. most of the people that get into it, it is kind of a cult of socialism and communism. And of course, National Socialism, which is what Adolf Hitler pushed, was basically not that different than what they were pushing in Russia and the Soviet Union. A lot of people think that it was different. Just a lot of confused people. On this day in 1939, 20,000 morons attended and raised Nazi salutes in Madison Square Garden. And you never think about it that much. Okay, what else do we have going on? Let's go ahead and look. I saw Microsoft was off a little. None of these things really seem to be making that big a difference. And now we're up 2 points on the S&P cash. Microsoft made it to this gap. Oh, of course, you can email me at path@tfnn.com. You got this gap down, which is on the 14th of December. Came down with 47 million shares. Got into that over the last couple of days with 26 million shares and 18 million shares. Now we've rolled back down on Microsoft. I still suspect that the buy on this is going to be down around 99 bucks as we pull back. There hasn't been any real energy in this stock back to the 31st. So it's like a lot of these, they just kind of come up here on light volume, and a lot of people wishing that these things are going to go higher, but not a lot of buyers as they do go out there and do their little dance on the catwalk. Or you can look at it as prairie dogging, sticking the head out. And does anybody say anything? Or is there 6 more weeks of winter? And none of these things really look like they're getting that much love up here. Facebook continues to have the press that I think a lot of people would jump out of a window if they were in business got. Doesn't seem to hurt it as much as some others. But the press on Facebook over this weekend was fairly horrendous. And as long as they make money, I guess it really doesn't matter what they do. Maybe the cigarette companies are a model for this. And that is, if you make money, you'll still find people that buy your stock, no matter how horrible you are as either a person or as a corporation. But again, this morning, another article out about how Facebook was misleading a lot of folks about participating in a medical review, and come to find out that everything in your that they get about your medical condition will and could be easily traded around, as many people trade playing cards as they are playing cards as they were a kid, or players cards, trading cards, I guess, of players is what I'm thinking of. Anyway, it's back in here. You're looking at about 57 bucks as where support should come back in. You did have a nice pop with a sign of strength on the 31st.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're back. We were looking at Facebook here. Let's take a look at a couple of the other ones. Intel, INTC. Got their new CEO. It's not somebody that I would want. It's been banging around, of course, the $50 level. It got up to $51.73. And again, on the short term, probably pretty good for Intel. The CEO was a CFO, so generally what they'll do for a year or two is be able to cut out all the dead wood. And generally, CFOs are not very big on spending money in the long term and development dollars. They'll come up with some kind of formula, not what they actually should do. And almost always that ends up in a company that is long-term stagnated with its growth. But in the short term, guess what? They can make that balance sheet look a lot better in the next 3, 6, 9 months. In a year from now, you can almost always say with a CFO instead of a CEO that you've probably got some kind of price high in the company, even with some of the new products that they have coming. Just seems like these CFOs leading big tech never seem to do that well. Maybe he'll be the odd man out, but everything that you read makes it sound more like a Game of Thrones, and he was able to oust the previous CEO and actually implant himself as the current CEO. And just always makes you feel a little rough around the edges. Today, we're going to look at a lot of stocks again today. This is where these things are worth their weight in gold. If the markets actually turn, you're going to find significantly higher returns in the market than you would going on indexes. Arcadia Pharmaceuticals, we talked about the biotechs looking like they were kind of topping out yesterday. This one did test the previous high of $23.55. That's the November 2nd high. You did that with 3 million shares. Tested it yesterday with 1.1 and change, so about just a little bit more than a third of the volume. A little bit of rotation back down and lower. Autodesk, also testing its previous high. We've been talking about these stocks coming up here and kind of taking a big yawn at previous highs. August 27th on Autodesk, 159.94. That had 8.5 million shares. Tested that a couple of days ago with 1.7 million shares yesterday, 1.7 million shares, and today 672,000 shares. And it rolled over here just before the earnings, the FOMC meeting. Now we're down 5.5. And we got that. Okay. Oh, and anyway, Autodesk. Energy wasn't as bad as some, but still just a little lighter off that December 24th low up into its high off, compared to that high off August 27th, down to the October 29th low. Kind of a big, almost a little bit modified W formation there. Again, you can give me a call at 877-927-6648. American Waterworks, we talked about this one for a little while, still testing its previous highs. The December 7th high, a day that will live in infamy, $98.18, 834,000 shares yesterday. Today, a little more. It did spike the high and did not hold it. I'm not a big fan. Probably they'll still push that to 101 or 102, even if it's going to fail. The Bemis company had a huge move back up to a high on August 3rd at 52.38, and 6 million shares. A little over that today with 300,000 shares. So very, very light volume. Look for a close or an open tomorrow and an abandoned baby on that little guy. Checkpoint Technologies also testing its previous high. It had a 1.3 million share high on September 17th, 120.81. And you spiked it yesterday with 1 million shares. We've got Dave from Framingham, my favorite caller. How you doing, Dave?
Hi, Dave. How are you? Thank you for taking my call. David, ECLA is up to high as 307. We talked about this the other day. What do you think?
Well, if we look at the rest of it,
we talked about the 293 area there.
Yeah. You know, short term, are you going to get what you want? The question is whether you're trading it or you're investing in gold and gold miners now.
I got in there around $2.34.
Yeah, but I mean, what are you committed to a long-term position in gold, or is this just, you know, something you're using as a trade now?
Well, back in 2016, it got up to 27. I mean, up to $7. I'm thinking if we can get it up to 4 or 5, maybe.
Yeah, if you can hold it, you
can hold it.
The question is, the moves on gold are so brutal that is problematic. I think what we saw today, and I'm going to withhold judgment for a little bit, until we see the close and see how gold reacts to this FOMC meeting, because I think a lot of people were thinking that they would mention that they were going to do something with the bond redemption, and there's nothing, at least anything that I can find in there, that does anything about that. So, you know, I was looking for some movement maybe today in the TLT. You know, we're down a little bit. We're still stuck in this range. You're either going to have a giant move in the TLT or the dollar to get it out of these range, but kind of stuck now. That would lean me more to being a trader in the gold equities and a holder of gold, the metal. So let's go back and look at Hecla here. What you were looking for is 5 million shares. You got 10 million shares. Like a ton of other stocks, not just in the gold mining area, it's not closing above that January 10th high. And that means that you probably could get back to $2.70, maybe $2.65. And then maybe the next run up, it actually breaks that 293.
Yeah.
But the action today, you got all the volume in the world. If it closes above 293, you generally have to say, I'll hold and I'll sit on my hands. If it closes below 293, you have to say, you know, all this volume in the world should easily probably stayed above $3.
Yeah. Can I hang on for a minute?
Yeah, you can. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. We're flat on the S&P, cash up 8 on the Dow, and NASDAQ that's not updating all the time. I see it down 15, 16. Okay. David, are you back?
I'm right here.
Okay. So what else are your question here?
Okay, question 1377 on gold. Do you think we'll hit that shortly? That's what I'm wondering.
My theory on gold right now is that we're in this, I've got Chapman wave stuck in my head right now. Seventh wave of a what was that thing that Pring had? That oh God, I'm just having a mental blank.
That's fine.
Huh?
It's okay. Take your time.
Anyway, it was Elliott wave theory.
Oh,
That's what I'm
okay.
thinking of. Something that really you can only use in a rear view mirror. It never works for predicting anything. But he did have an interesting theory, and that was on the seventh wave, you have these markets that just kind of stumble up very slowly over a real long period of time. And on the very last one, that's before the entire market implodes, but a lot of times it can last a year, year and a half, or 2 years.
Yeah.
So my thought right now, the way gold is acting, is that it could just be up like $5, $6, come down a few bucks, stumble back up. It could be maybe the most boring thing in the world. And if you try to trade in and out of it, it may be problematic.
Yeah.
So I'm leaning more to that way right now, and that we're not having anything. If I said a stock was going to the moon because it went from $13.40 to $13.70, he'd probably look at me and think I was nuts. And that's really the percentage changes are so small and subtle that that's basically, there aren't a lot of signals and there aren't a lot of stuff to do. Generally, the way to trade gold, or the way I do, is if you're in a trend, sit on your hands and just try to tough it out. I know it's tough. In here, what do we have? 298. So you're 5 cents above it. As long as you hold 293, I think you have to sit on your hands.
Yeah. David, what about the GDX? Where do you see that getting up to? Do you see it going back up to the 31 area from here? On GDX? Or it's 25, probably. I'm looking at the 24, 25 area.
It's more problematic because there are a lot of gold companies in there that aren't all winners. And that's kind of, now this one, we had a lighter volume spike of the April 18th high.
Okay.
So I'm thinking that if you're trading gold, which I think is over time probably the metal is probably going to be two, easier to hold, and two, less of an issue of waking up one day and finding out that a couple of the stocks reported out poorly. But what was it last week? Was it New Gold? NGD?
Okay.
NDG. Not all. NDG. Did I know? NGD. Okay. It got hammered. And you got a handful of those stocks that I suspect could do something similar. So as a group, I'm not a big fan of the GDX or GDXJ. They all seem rather stretched, not in the fact that gold couldn't go higher, but just in the fact that some of the companies are not as good as others. So for me, I would be a stock picker and not try to be in the index, or at least from the ones that I looked at.
Okay.
I think Hecla, I mean, your chart is about as good as most of the other ones, but there are a handful of them that are just as bad, like New Gold, and that's problematic. So for me, I'd probably be in gold first, and individually, secondarily in gold miners, but just gold miners per se on an equity basis, not on the ETF. Yeah. Maybe that'll change. Maybe a lot of these will get washed out, and then GDX will look a little bit better. But I mean,
we're looking at the on the GDX.
I mean, this spike
daily.
doesn't. Go ahead.
Is that some kind of a bull, some kind of a flag pattern here from the February going down here?
On what?
On GDX, yeah.
I don't really see much of a flag pattern. I mean, you've had a couple of pullbacks and push up high. You're just going into that April 18th high of last year. There was a lot of juice back then, and that's where it kind of gave it up. Now you're hitting that, at least so far today, the volume is a little lighter. and I would not be surprised because, like I said, there's some stocks and equities that are going to far outperform the rest of them. But I don't know. Are you in one of those two?
GDX, I'm in.
Okay.
I got into
to me,
GDX
if you don't get
$19.
56 million shares by the end of the day, does have a signal that you'd probably be out of that. Tekla looks a lot better than this one.
Okay.
So if you were thinking about doing something, I'd probably roll out of the GDX and keep the HL as long as it closes above that 293. It looks good.
Okay.
The chart looks good. This one kind of looks like it may have had a buying climax today.
Okay.
In the short term.
Yeah, David,
maybe 22 and a half, something like that is where this might pull back to, or as much as 22. And you might be able to get it again.
Okay. You know when the Fed meeting is this month? You said something on February. When is the FOMC?
Oh, no, the FOMC meeting from the last one, the minutes came out at 2 o'clock.
Coming up.
Now, on the FOMC meeting calendar, is right there. You've got March 19th and 20th.
Oh, I see. Okay, so there's a way off. Okay.
Yeah, there's nothing here. It's just the only thing that was really kind of worrisome is that they really talked up the last FOMC meeting, and especially in December where they what they said didn't match a lot of what they were saying. I think people were trying to see on this FOMC meeting notes whether or not it matched what they were saying.
Okay.
And it's the only thing in here is they still aren't giving anybody any clues on what they're going to do on bonds, if they're going to continue pulling $50 billion out a month, or if they're going to start adding some. I don't think anybody thinks they're going to add some, but it would be nice if they aren't hammering the markets as they have in the past months. And I think the market's kind of up here on that. The question is, at the end of the day, what the market actually digests this as. And I don't know why
All right. Thank you very much, David. Okay.
You bet. We'll come back. We'll look at a lot more charts.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Had a question to take a look at TTWO, which is Take Two Interactive. It's had a pretty good reversal today. It's going back to this gap of, what is that, August 3rd of 2017. That gap had 11 million shares. And let's see, you're down today on about 4.6. So coming back to support, of course, these things had a big run over the last year. Now, some of the games coming out don't need as much hardware, and just about everything's been kind of hit by Fortnite. And what's the other one? Some of the other new games that don't really need that much hardware to play, and it kind of hurt sales for a little bit. And again, I think everything kind of comes in waves, but you're probably going to need some level of consolidation down at around 86s, the high 86s. Your high wasn't that long ago. October 1st was 139.91. So expect a little bit of consolidation out here. You are testing on previously lighter volume for both the beginning of that gap and the test back on February 12th. But I don't think that that's going to be the end of it. Okay, what else do we have that we wanted to look at today? As the market continues to bounce around, up and down, down and up. What are we now? Okay, down on 4 on the NASDAQ, up 4 on the S&P, up 53 on the Dow, and the Russell's up a little more than 4. No, a little less than 4. Okay, and we'll check back in here for the volume. 4.6 billion shares. So basically what we've been doing the last few days, which is just a very decent mornings and very light afternoons, some volume at the close, but not enough to make up those afternoon light times in the overall volume. Okay, go back here and look at it. Costco, COST, coming back up to this resistance when this thing gapped down on the 14th of December. 8.8 million shares on the way down. Yesterday, you had a little less than 2 million shares. Today, 1.1 million shares as it comes back. It's not feeling a lot of love like Walmart did on its blowout numbers. We continue to see weakness in the REITs, Equity Commonwealth, EQC, testing the October 3rd high, $32.66, $32.90, which is that February 15th high. And so you got that. Energy very light off this December 26th low, and very light up at the highs. But these REITs look like they could be the weakest part of a lot of the market. DBT, Global Blood Therapies, has been banging against this $52, $53 area for a while. tested its previous high of 1.6 million shares on August 23rd. Yesterday spiked it with a little less than 700,000 shares, down today on 324,000 shares. Again, a lot of these, some of them are not as bad as others. That one's not as bad as some of the bigger ones, but you continue to have problems at the highs with any kind of volume. Glocos, GKOS is the symbol, $70.91 on August 29th with 11 million shares. Got into it with less than 1 million shares on December 4th. Came back down, bounced off support on January 3rd. Now back up, and so far today, what do we have? 106,000 shares yesterday, 267,000 shares. Again, this market, if we did get a real big surprise, looks like it could have some significant downsides now. We talked about the IBB up on highs, a little lighter volume. December 3rd, you had, what, 2.3 million shares, $111.60. Got into it yesterday with about half the volume of 1.2 million shares. Day before, 1.7 million shares. Today, you're down on about 900,000 shares. We continue to keep an eye on those. International paper, which is kind of a canary in the coal mine. We've been waiting to see how this one breaks through the December 3rd high, $47.68 with 4 million shares. Today, you're into it with 2.7 million shares. It could get a little bit better. Intuitive Surgical has been bouncing against this $546, $550 level. Got to $550 today, and the volume is significantly lighter. You're looking for something like 1.3 million shares. You've been getting in here at about 600,000 shares. So far today, under 400,000 shares. Let's get to some other ones here. We got a couple minutes left. We've been tracking this one all week, and that's Roper Industries. Another one up on very light volume. This is $312.24 on September 17th. That had 1.4 million shares. Yesterday, as you got into that high, 225,000 shares. Today, 139,000 shares. We got to go to Ben in Tallahassee. How you doing, Day?
Hey, great, David. How are you?
Fantastic.
All right, good. I'm just, checking to see where your head's at now that the Fed minutes have been released, and given where the market's at, you see a short-term pullback coming, or you think we're all still just waiting on hold for China?
Oh, I think we could hold on China for another year. So I'm not in the camp that thinks that there's anything of long-term or even medium-term benefit from trying to play some kind of deal that's coming out of China. To me, the biggest thing that I look at is just the total lack of energy back up off this last major low. You came down with massive energy down to the 26 low, and you come up and you've had light energy. And we've come back up to the previous highs, most of them around that either first week of December or the 24th, or off that 24th, and there just isn't a lot of energy in any of these things. So
yeah, do you think it's just going to be a pure technical move, or do you think it's going to need some kind of a crazy news story to instigate this downturn?
It just looks to me like there's just too much complacency. So probably some kind of news story out of the left field that no one thinks or is thinking about now. But you just, I mean, you really wanted to see a absolute super ton of volume, and I don't know. You just...
Well, there's no doubt. I call it the hair test. When I'm ready to pull the last strand of hair out of my head, is usually when the market turns.
I think we're fairly close. Today's the last day of options rolling, and
yeah. All right, David. I appreciate you. I appreciate your. Yeah.
We'll finish up that thought in the last segment. Thanks for the call, Ben.
We both know you've got what it takes to crush your goals with the will to. Why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my one-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And last question of the day. Looks like it's going to be about Cisco. Just banging around $50 at these highs. Again, all these had volume at the lows. All of them are pretty much these big caps have all had significant energy or less energy on the way back up to these highs. Cisco, not the worst looking of the bunch. There are much ones out here that had light energy on the way up and have tested the previous highs on lighter volume. Certainly 30 million shares on December 4th for Cisco compared to yesterday's 20 million shares isn't real heartening. But you know, could some news come out and you go a little higher? This one would probably not be on my list of shorting. There's a lot of stocks out there that seem to be a lot weaker, but there's just not much on that to go on. Let's check on one last one of the day, and that's United Rental. Again, these things were already in downturns and went to previous lows. November 7th, 134.49 on URI. That's after it gapped down on October 19th with 4.8 million shares. So you've been banging against those. To me, those are a lot better short opportunities. You didn't have all that kind of energy coming up off the lows. But for me, you're right in the sweet spot on something like that, opposed to some of the bigger names out here. You're up against severe resistance, and here's where you can have very short stops. This thing probably shouldn't close above 139, and you're fairly close. So again, just because you think the market's going down, you're still always looking for the weakest, not the strongest of the stock. And there's a lot of these stocks that haven't gone back up to the previous highs and have fairly light volume testing the gaps. These look a little bit more interesting to me. Anyway, we'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter